Okay, so a lot of people might be wondering, why not just hold TQQQ, which is the triple leveraged ETF, instead of the strategy? And since the ETF started in 2010, it's had incredible returns, but why not hold it instead of applying a strategy to it? Now, I know that a lot of you probably remember a lot of you probably don't, but many of you do, the .com bust here in 2000. The NASDAQ, this is the NASDAQ. So this is not leveraged, of course. This is just, for example, the QQQ chart here. It's a weekly chart, so you can see this drawn out here. But what we're trying to show is if you were to hold QQQ, it would have had an 85% drawdown. From this peak here, on the .com bust, all the way down here, 85%. And then the Great Recession, 54%. And then you will see 2018, 23%. This drawdown here at COVID, 30. And then the 2022 pullback was 37%. So those are the drawdowns on the NASDAQ. Now, what I'm going to show you next is, this is really good. This is from optimizeportfolio.com. He's just does research on a lot of stuff like this. I'm going to move this here. What you'll notice over here to the left, if you would have purchased for example, TQQQ, this is a triple leverage. Now, it didn't exist then, but if you were to have a triple leverage TQQQ, you would have seen that 85% drawdown that we saw during the .com bust right here in the red. That's the QQQ. That's 85%. But holding the TQQQ, right, the triple leverage, would have had a 99.95% drawdown. All right, which is, really, and look, if you would have held it all the way until, I think this is 2023, but it wouldn't even have been a break even. All right. So and you can see here the QQQ, just holding the NASDAQ, it actually took the NASDAQ about 14 years, well, a little over 14 years to break even after the drawdown in 2000 and, the year 2000, 2001, which is why a strategy is really important. Our strategy works really well on the QQQ, the SPY. You can apply leverage. You can use of course, the TQQQ on our strategy, and I'm going to show you what are the recent trades that we just closed a couple days ago. But I'm also going to show you this. What's really important to remember is, if even though you lose, let's just say you buy a position, you buy a stock and it goes down 50%. Let's just look right down here in the middle. It takes about 100%, right? If it drops 50, the stock price has to rise 100% to come back to break even. All right. And what I've done is I've showed 1%, 6. Now there's some decimals over here that are missing, but you'll notice that once you'll see that the recovery gain needed starts to really accelerate and is exponential. So let's just say the stock goes down, not 50%, but like for example, TQQQ, if it goes down to 80% drawdown, that TQQQ would have to rise 426%. But look at 91%. It would have to recover 1,000% to come to break even. And look at 99%. If you had a 99% drawdown, you would have to have almost a 10,000% gain on the TQQQ, which is why the strategy is really important to employ. You just can't hold it. And that's because it has decay. TQQ has the triple leverage. A couple things, right? It's triple leverage. Everything, every day it's resetting. So we want to be in a swing trade where we're in and out of the stocks, no more than really about 2 to 4 days. And I'm going to pull up the chart here so you can see here. Okay, so what you're looking at right now is the TQQ on Trading View. And I'm going to show you what you're seeing right now is this is the 15-minute chart. This works well in 15-minute. There are other settings you can do for other time frames, but really the 15 is what we like to do. We just a couple days ago, we just did this trade. We closed this one right here. And this was May 16th, Thursday. So it was yesterday for us, and we closed it. Let me show you the gain was about 8%. Okay, and it got out. Okay, but I'm going to show you it got out, and of course it's coming down. It may rally again, but again, this is a breakout type of strategy. We avoided, if you look back over here, we avoided this in April 12th, this big drawdown here. What was that drawdown? Oh, let me redo that. The drawdown was 17%, so we avoided that. This strategy wins about 38% of the time, but remember, it's about winning bigger. This strategy wins bigger. In here, out here, in here, out, in, out. So again, it's waiting for the breakout, and that's what it does. Now, let's look at the strategy right here. Okay, I'm going to go to properties. If you go to properties right here on the strategy, backtesting, you can see this is April 9th, 2021. That's where this backtest is looking at. And now what you see here in the green, that's the backtest. It's made about 178%. Now I'm going to click this button down here called buy and hold equity. And that is showing you the buy and hold of the blue line is the buy and hold of TQQ. And the strategy has outperformed it. Now, you're going to have days, weeks, months where the TQQ buy and hold is going to win and be more. Because it's going to rally. We're going to probably get out. But the point is we're preserving capital and avoiding these drawdowns. And then this blue line is the buy and hold, comparing it to the green line, which is the strategy. And right now we're a new channel, as you know. If you are interested in test driving the strategy, we have a 30-day trial in the description. Again, 30 days for free. You have full access to run it. We have the settings that we suggest, so at least you can start with. And again, this strategy works with many different stocks. I have this up here on my trading view: NVIDIA, Tesla, Square, Soxol, which is the triple leveraged semiconductor, Amazon, ARK, Apple, Marathon, it's Bitcoin miner, and AMD. So we'll bring you more videos, but be sure to look in the description for that free trial. Ask us any questions you have, and we'll be happy to help. Take care, everybody.